Let's talk more about the pressure mounting on Facebook. Joining us now is Loop managing partner and Fast Money friend Gene Munster. Gene, great to have you with us. At some point, is there a straw that breaks the camel's back or a straw that questions the valuation of this stock? I mean, is this going to be the same as the other rounds of congressional testimony, controversies here, and then the next day it's gone and advertisers flock to the platform?
I'm sad to report, as someone who believes that Facebook, Instagram is toxic to our mental well-being, I'm sad to report that this is likely going to blow over. When Pete said this company is Teflon or Zuckerberg is, that theme resonated with me. And in part, and I'm just going to boil it down to its most core pieces, what Facebook, Instagram, WhatsApp, what they have is a global directory. This is something that is not even close to being replicated by, it's 5x bigger than the next biggest global directory if you put TikTok as one of those. And so as an investor, you can't replicate that. And as an advertiser, you cannot replicate that. And I think the straw that breaks the camel's back question, could this potentially be different, is a question around what happens with ESG investors. And do they see this as a reason why they are compelled to lighten their positions? And I was spending some time on Facebook Investor Relations page today, and I would recommend anybody go to ESG resources on Facebook investor page. And what you'll find is approximately 50 links of 50 reasons Facebook gives to ESG investors. Some of them I think are comical. But my point is that even these ESG investors, I think as they sit back and think about, do they need to own Facebook, they can justify owning it based on a number of reasons, 50 reasons that Facebook gave them. So I think that this company is going to continue to ultimately move higher because of that core asset.
Hey, Gene, it's Tim. To me, it's preposterous that this would be filed under an ESG. If anything, ESG investors would start up with a portfolio that was not Facebook. Guys talked about this all the time. I guess, my question really is, at what point with 41% ad price growth and essentially the digital ad space doing what it's doing, what's the multiple the stock actually can trade down to when it becomes too compelling, even for folks? Let's face it. A lot of investors have been investing in oil and gas or carbon footprint or things that from an ESG perspective and whatnot, they had to hold their nose on, and they were very happy to do it at certain levels. And I guess my question is, where does this stock go when it gets so cheap, or is it, could it be there even if you don't like the toxicity around Facebook and Instagram?
I don't think we're there yet. I've got incredible respect for Karen and how she manages her portfolio. I would still be holding off here, in part because I think the way this is going to play out, I don't want to get off topic here around the debt ceiling, is going to be a debt downgrade of the U.S. ultimately. And then I think that's going to bring a lot of multiples down. And so to answer your question, where does this become kind of a no-brainer? Will you buy it? It's probably around 20 times next year. We're not there. I think we're 25, 27 times. I'd much rather own Apple on this pullback than Facebook.
Gene, you cited the ESG resources page, and I went there, and it's a good point that ESG is subjective. But on several accounts, I would imagine that Facebook would be ruled out. Least of all, the share class structure would be number one in terms of a strike against it for governance. And then, if you are to believe that Facebook did, in fact, conceal some of this research, that would be another. So even before any of the scandal, there is a reason to go against it. Do you have any idea of how many funds or how widely held this is amongst ESG-oriented funds? Like if that is a major push behind the stock?
Unfortunately, I don't know that. I suspect that that those funds are massive, and I suspect that it's a measurable amount. That's not particularly helpful, but I think that this is something that, fortunately, I guess for Facebook investors, they don't need to really worry about this size, even if it's 10, 20% of the holdings, because I think that those investors are going to find ways to justify. Humans find ways to justify their behavior. Investors are humans. And I think that, if the reason that you owned Facebook was an ESG, I suspect that the vast majority of those will look beyond this and try to find other ESG. I just want to anchor, I guess, a plea to investors here more broadly, just to anchor that, what companies ultimately make our lives better. Facebook's going to crush it. Like, do not get me wrong. This metaverse, we're going to be talking about this for the next 10 years because it's going to be so big. Facebook's got a pole position. The stock's going higher because of that. But I wish they would just have better rails on what they're doing, where some of those are coming to fruition now. If anything, that's what I really would love to see, is investors just ask for better transparency.